How's it going, everybody, and welcome back. Today we're going to be talking about what is going on with this Bitcoin crash. Is India really banning crypto? Is China really banning crypto? What are the US banks doing stopping you from buying Bitcoin with your credit? And why does this all seem to line up with the stock market crash? I'm Elio Trades, and you're watching FUD TV. We're going to get to all that and more starting right now. We're going to start with some good news today. What is happening with this Bitcoin crash? Is there any government who supports Bitcoin, or is everyone just cracking down on it? We're going to start with some good news out of America. First, we're talking about the CFTC, which is the U.S. Commodity Futures Trading Commissions, and the head of that committee, J. Christopher Giancarlo, said in a written testimony that this technology represents a paradigm shift. Distributed ledger technology represents a paradigm shift, and that trying to block them or regulate them out of existence, quote, will not make them go away, and nor is it a responsible regulatory response. So Giancarlo also talks about this idea of do no harm here. And he said that it was unquestionably the right approach when trying to regulate the advent of the internet, with Amazon taking over e-commerce. The way that we've come and had the internet businesses fundamentally restructure the way that we organize our daily lives. This was all made possible by a do no harm mentality held by the US government and regulatory bodies. And so we can only hope that this mentality is carried forward as we go into the next era of innovation that is being supplied by distributed ledger or blockchain technology. So as we talk about government responses, and we're talking about the truth behind this Bitcoin crash, we also want to take a look on China's new trading crackdown, which we covered briefly yesterday. And the question is China truly banning cryptocurrency, or are they simply trying to bring in new regulations? Now, I want to be clear here. China has banned the trading of cryptocurrencies on foreign websites. Foreign cryptocurrency trading exchanges will be blocked by their Great Firewall. And so the question now is this a ban that is now insurmountable? Does this mean that the Chinese people cannot get into the cryptocurrency markets the way that they have been participating before? And I want to be clear here. Even though they already banned domestic cryptocurrency exchanges, they've specifically omitted talking about anything to do with Hong Kong. I'm going to search this document, and look, Chinese officials have been moving against digital currency for a while. These moves have prompted over a dozen homegrown players to relocate from China to Japan or Hong Kong, right? So we're having these big currency exchanges such as Binance, such as KuCoin, such as these big Chinese exchanges moving from China over to Japan or Hong Kong, and I think that's true of Huobi as well. So we're seeing that these domestic players aren't just closing up shop, they're moving. And so when we see that Hong Kong is being specifically omitted from any statements by the Chinese government, by the way, this was a closed-door meeting that news leaked from. This was not an official law that's been passed. It's simply a declaration of intent by the Chinese government to make these laws come into effect. And when we see Hong Kong, which, by the way, has been functioning with more or less impunity, since China has come back, since it's come and reunited with China, their internet laws are completely different. Hong Kong has full free access to Facebook and internet currency exchanges, and there's just simply a totally different regulation going on as far as crypto in Hong Kong. So there could be a loophole here where China is actually making it illegal to trade on foreign currency exchanges, yet still allowing Chinese citizens to have access to Hong Kong exchanges, and yet still stopping the foreign players from growing off of Chinese citizens. It's sort of this way of allowing cryptocurrency, hopefully, to continue to blossom without allowing for other countries besides China to really reap those rewards. If I was a betting person, I would bet that China fully understands and embraces the power and the significance of blockchain distributed ledger technology, and that this is simply an attempt to control or in some ways manipulate their position within the market. I honestly could not imagine a situation where the Chinese would try to stifle completely the blockchain world and the Bitcoin growth or the cryptocurrency growth that we've seen over the last few years, given that at one point China was over 95% of the cryptocurrency market. To support that point even more, I have here a chart that shows, and I'm getting rid of the US dollar and the market caps here. I just want you to see since February, the price of NEO against Bitcoin has really not dropped very significantly. In fact, since the news that China was going to ban crypto, quote unquote, that came out yesterday, there's been very little movement on NEO, NEO is the very much so the leading coin in China. And there's been a lot of rumors that NEO is even working with the Chinese government, which we will continue to unearth the truth or fiction of those rumors as we sift through these developments in the story. But I wanted to show you this chart to show you that since yesterday, really, we're barely trading at, we're not even 10%, we're a few percent maybe down on the NEO chart as it relates to the Bitcoin chart. And I just want to show that really if NEO's not taking a huge dive here, then there's still tons of confidence in the Chinese market, because NEO really does hold a lot of stake in the Chinese market and represents China's sort of participation as a platform in the cryptocurrency game. Finally, I want to talk about the sort of response from institutional investors here in America, which we know that since October, since the late part of Q3, Q4 of 2017, the big Wall Street banks have seriously been eyeing the crypto space. In fact, as in October, Goldman Sachs put out a statement saying that in response to client interest in digital currencies, we're exploring how best to serve them in this space. We also know that there have been whispers and rumors that Coinbase is going to start accepting institutional money, though those are very much so unconfirmed. We know that the big banks understand that this paradigm shift in cryptocurrencies could mean the end of traditional banking systems as we know it, and why it would be so logical to think that these banks would be looking to protect their position either by investing at an advantageous moment or by trying to stifle access or slow down the growth of the cryptocurrency markets. Now, hearing that big banks such as JP Morgan, Bank of America, and Citigroup are halting purchases of Bitcoin and other cryptocurrencies on their credit card, saying, quote, that they are deciding not to finance a falling knife. And this is from Bloomberg, of course, the type of salacious news we get from mainstream financial media. But we have here a large consortium of international banks, mostly American-based here, that are saying, we are not going to allow our customers to use credit cards to buy Bitcoin, despite the fact that Bitcoin is, for the first time since November, falling into what we consider to be a true correction phase, a true time where a retail investor such as myself or as many smaller investors could get an edge, if you will, by taking a reverse position to the market. For example, if I wanted to use my credit knowing that this month would be a dip, a low in the Bitcoin charts, if I wanted to use my credit to buy Bitcoin knowing that next month I would see a pop, feeling that I could use my good credit that I've built up throughout the course of my life as a responsible consumer to buy this Bitcoin, the fact that I can't do that now if I'm a member of JP Morgan Chase, Bank of America, or Citigroup speaks largely not to my credit or my credibility as a retail investor, but to their own fears about retail investors putting their money into a currency that they will not be taking it out of. In fact, I believe that the sort of hodler's mindset that has the hodl culture that has sort of infected cryptocurrency is really to be blamed, or is responsible for both bringing cryptocurrency into the mainstream as well as being this sort of iron shield against fear, uncertainty, and doubt created by banks and other sort of institutional players. So how does this all work together when we're talking about the Dow plunging almost 1,200 points in the worst point decline in history yesterday, and today we're off to not a good start, with global markets around the world reporting record lows from 2 to 5% losses in their entire stock markets. If we're looking at the London Stock Exchange, is between 2 and 3% down. The point is that we're seeing a mass exodus or a sell-off in the stock market, accompanied by an extreme dip in Bitcoin and cryptocurrency at a time where we know industrial institutional investors are looking to get their hands in on some cryptocurrency bets, get into this market in a way where they are big whales, where they're getting the banks always like to get the best price, the most returns possible on their investments. And so I don't think there's at all a coincidence between this extreme low that we're seeing in the market, a mass exodus out of the US stock market and global stock markets, and now you're seeing a stifling of retail or consumer investors trying to get into the Bitcoin or cryptocurrency space by not being able to use their credit cards or being charged exorbitant fees for doing so. And what does this all add up to for me? What this adds up to for me is a clear attempt for the people who hold power, who hold financial sway, to maintain that financial sway and to stifle smaller players from making moves or choices that would put them in a position to get ahead of this market. Right now, if I was an investor and I'm looking for the lowest potential way to get into Bitcoin, I'm looking to buy Bitcoin with all of my financial oomph right at the lowest point that it comes to. Now, I never invest what I cannot afford to lose, but I would always look to maximize my investment ability. And so to take away my ability to use my lines of credit as an investment mechanism, while I never recommend investing off of a credit card, I simply think it's irresponsible of the banks to do so and to take it upon themselves to decide and sort of say, play nanny as to what we can do with our own lines of credit, I think is not only irresponsible, but it smells of foul play. So my theory on this is that there's a connection between the stock market plunge, the banks deciding not to let us use our credit cards to buy crypto, the recent sort of correction in the crypto market, right, which is allowing for what we can only assume as if this market does ever reach back to its all-time highs, either this or next year, that today or the next day or this week will be ideal times to have bought into cryptocurrency, as the market is so low compared to those all-time highs that if we are headed back to those all-time highs, this will be a phenomenal investment for anyone who gets into them. So if you're asking me, it's a bit suspicious that at the best, what is starting to become the best time to procure cryptocurrency at its weakest, lowest point in the market, that we've seen it in months and hopefully that we see it all year, why are the banks stopping us from buying it? And why is there so much sell-off in the mainstream financial market? Are these things related? Is this just a tin hat theory? Please tell us what you think of this whole theory below. We're really curious. Do you think there's a connection between the US stock market sell-off? Do you think there's a connection between the banks prohibiting the buying of crypto with credit cards? Do you think that these events are somehow connected? And do you think that there's any way that these global financial markets can come into unity, can come into harmony, where the cryptocurrency markets and the US sort of fiat traditional stock markets can start coexisting? Thanks so much for watching. If you enjoyed this video, please like it, share it, or leave a comment below. Let us know, what coins are you holding? What topics would you like for us to cover? Did you enjoy or agree with our review? Please let us know below. Once again, this is not financial advice, and we always encourage you to do your own research while investing. Thanks a lot, and we'll catch you on the next episode.